Kitco News special coverage of the New Orleans Investment Conference is brought to you by Discovery Group.
Hello, I'm Michelle Mulquarrie. This is Kitco News, continuing our coverage of the New Orleans Investment Conference, where investors and financial experts have gathered from across the US and around the globe, including from the UK, where we have Dominic Frisby joining us from. Good to have you with us, Dominic.
It's a pleasure to be here, Michelle.
And to our viewers that don't know you, you are, of course, a prolific writer. You are the author of the Flying Frisby newsletter, a very popular financial newsletter in the UK. But you're also
around the world.
And around the world. But you're also Money Week's main commentator on gold, commodities, currencies, and cryptocurrencies, and the author of several books, including Life After the State and Daylight Robbery, How Tax Shaped Our Past and Will Change Our Future. And as I was saying, I watched your bit about attractiveness tax.
Oh, yeah.
Because you're not only a financial writer, you're also a comedian, and you kind of weave the two, which is very unusual and really very, very amusing in a high caliber intellectual way. So I really recommend everybody goes and checks that out.
Well, thank you very much. And that happened by accident. My father and I were trying to raise the money to put on a musical that he'd written. And so I started interviewing people a bit like what you do, because there were all these clever people talking on the internet, and I was trying to work out how to get as rich as they are in order that we could put on this musical. And one of the people I interviewed said, you should come and write for my magazine, which was Money Week, Mayor and Somerset Webb. And suddenly I find myself as a financial writer. So
well, there you go.
By accident.
But it's fantastic how you incorporate humor with sound financial advice. And arguably, we need a sense of humor to deal with the uncertain times that we're in. Very geopolitically, economically uncertain times. And some are even saying that, a nuclear holocaust could be on the way. Hopefully not. But the nuclear clock, as they call it, is at 90 seconds to midnight, which is the furthest along. And I bring up nuclear because you've made the point that cockroaches are one of the few things that are expected or said to survive a nuclear attack. And to that end, you have the Cockroach Portfolio, which is how to deal with, I guess, doomsday Armageddon type of scenario. So why don't we start off there and let's hear about the Cockroach Portfolio.
Sure. Just for clarity's sake, I didn't invent the Cockroach Portfolio. That was an invention, I think it was an invention of Harry Brown, who was an old financial advisor and a writer. Or he had this idea that there are 4 economic seasons, and to have a truly risk-free portfolio, you should have an allocation to 4 different areas, and that would survive all economic climates. So you would have 25% gold, 25% bonds, 25% equities, 25% real estate. Or that's how his original portfolio evolved to be. Mark Farber suggested something similar, as did Dylan Grice, who used to write for SocGen. But yes, the cockroaches are incredibly hardy creatures. And I think there are examples of cockroaches that survived Hiroshima.
Yeah.
And they've been around since before the dinosaurs. And they can survive in freezing cold, they can survive in the desert, they can survive underwater, and they can survive in tropical climates, dry climates, wherever you like. So they're very hardy. So it'd be very useful to have a portfolio that was as hardy. The interesting thing about Harry Brown's original Cockroach Portfolio, though, is that the S&P 500 outperformed it. So you would have just been better off buying it. It didn't do badly. You didn't lose money, which is kind of the point of it. But the S&P 500 outperformed it. So you just may as well have bought S&P tracker.
Right, and that's another point that you made in this presentation. And yes, you do reference other people that, give input towards these portfolios. But you made the point that in order to make a lot of money, people usually focus on one particular bet, one particular area, and then to preserve that money is when diversification comes in.
Yes, that's absolutely right. If you look at the richest people in the world, most of them didn't make their money by being diversified. The purpose of diversifying your portfolio is to keep what you already have. But whether it's, most people have made their bucks either through their business or if they've got a special talent through their profession, whatever it is, but it's by being concentrated. The diversification is to protect yourself. But nevertheless, with the cockroach in mind and with diversification in mind, in my newsletter, what we've been working on, I call it the dolce far niente portfolio, which is Italian for sweet, doing sweet nothing. And like most of us have got busy lives. We don't have time to constantly monitor what each company's doing, the daily movements of markets. And so we need a portfolio that, it's been time and time again proven that asset allocation is more important than individual stock picking. So it's more important to be in the NASDAQ during .com than it is to pick whatever NASDAQ stock it was. And so we've developed the dolce far niente portfolio, which is sort of based on the Cockroach Portfolio, but you might reallocate maybe twice a year or even once a year. And at the moment, we're very long gold. We like gold a lot. And in fact, if you want hardy, gold's been around even longer than cockroaches have. We like Bitcoin, which in digital terms is extremely hardy as well. We like energy, fossil fuels, despite net zero, and I think the world's turned against net zero, by the way, and ESG and all the rest of it. But despite all of that, fossil fuel consumption is still on the increase, and yet it suffered maybe a decade of underinvestment, like uranium a lot. And I think uranium, I just think you want to be long uranium until we get regime change in Russia, because Kazakh uranium can't get to market. Basically, it can't, because if it goes east, it goes to China, and China doesn't export uranium. If it goes north, it goes to Russia. If it goes west, it goes to Ukraine. It can't get through, and it goes south. It's got to get through Iran and Afghanistan. So there's a big problem. Kazakh, and then we have Niger as well. Right. So there's a structural shortage, and there's a lot of uranium development companies, but how many of them are actually going into production in the near future? Not that many. So we like uranium. Stocks, we like S&P 500. It's overvalued relative to other markets in the world, but it keeps delivering. And small caps, over the long term, small caps outperform large caps. At the moment, they're very cheap relative to large caps. So we like small caps and private equity as well, Japan and emerging markets. So that's kind of where our diversified portfolio is.
Right. Let's focus on the gold portion.
We're avoiding real estate. We're avoiding real estate.
Avoiding real estate.
We don't know where interest rates are going, excluding your own home. And it kind of where is a very good point. But in the Anglosphere and Europe, Western Europe generally, real estate's got problems because of higher rates. And then bonds, I don't like government bonds because I feel that if you lend governments money, you are enabling them, and one shouldn't enable government. So I don't like government bonds on point of principle. And again, there's the interest rate risk.
All right, let's focus on the gold part of this. I mean, we have other guests that we're speaking to on uranium, but what I like about you and your outlook on gold is that it weaves in a lot of history, a lot of mysticism, if you will, and a very pragmatic, practical approach as well. So starting off, back to that portfolio, what allocation are you giving to gold?
15%.
1.5. Is that physical gold, hard
Yes.
gold, or is that gold ETFs?
No.
Gold
Well,
mining
physical
stuff?
gold ETFs, it's the same, not mining.
No, not gold miners.
We have 10% portfolio, we call it special situations. We'll call it fun money. And you might take some of that special situation money and invest it in speculative junior mining companies or whatever. But owning a guy who's got a drill and a bit of land is not the same as owning gold. Right. They're two very different things. Admittedly, they both rise together. But if you look at the ratio between physical gold and gold mining companies, it has been falling since 2005, 2006, maybe even 2004. The metal has outperformed the miners.
Since 2004. I mean, I know it's been very frustrating for investors lately, but this is a long-running trend.
It's a long-running thing. If you go back to the 30s, Homestake was the best stock to own in the 1930s in North America. But the reason a gold mining company did so much better than the metal is, one, the price of the metal was fixed, and two, it was illegal for Americans to own gold. So they bought the mining company instead. From about 2003, 2004, we got the gold ETFs, we got there were futures, spread betting, options, gold money, bullion vault, all the online bullion vaults. There were so many gold core, pure gold company. There were so many different ways. Now we've got gold cryptos. There's so many different ways to own gold and get exposure to the gold price. Why take the geological risk and the company risk of a miner? And so that's why this has been occurring.
That does make sense. If you have other avenues to get exposure to gold, they're ones that are more. But arguably, perhaps with the less upside, though. Arguably, with you don't have as much dramatic upside if you get a junior that does well.
You don't. The problem is, most companies don't make it from exploration to production. And if they do, it takes 15, 20 years to bring a mine from exploration to production. It's a long time. And most development companies are net drains of capital. And over a 10 or a 20-year period, the price of the metal can change, the price of the political situation can change, a lot can change. There's just so much risk, most don't make it. So when you find one that does make it, and you can make a lot of money, either they make a discovery and they sell the company, or they make it to production, or they beat estimates, whatever, you can make a lot of money and you get the reward. But it is, and I own a lot of mining companies, I write about them in my newsletter, but it is not the same as owning physical metal, and one shouldn't conflate the two. And in the Do Nothing portfolio, we have an allocation to special situations, and we have an allocation to gold.
And the miners fall under the special situations, the more speculative approach.
And by the way,
is there any miner you want to highlight that's in your special situation bucket?
Why not? So my favorite silver miner at the moment is a company called Sierra Madre Gold and Silver. They just announced their mineral resource estimate the week that we're speaking, in fact, yesterday, and it beat its 370% higher, bigger resource than the last announced resource. Massive increase, 50 million market cap, going to be producing next year. They've got all the permitting in place. They need to raise a tiny amount of money, which they'll do, and it is ludicrously cheap for what it is. Sierra Madre Gold and Silver, that's one. Moneta Gold, I like, huge, the largest undeveloped gold resource in North America. The resources are now, it's 14 million ounces. It's probably going to go up to 17 or 18 million when they next have their next mineral resource estimate, which will be next year. It's trading at $6 per ounce in the ground. And this is North America, Canada, in the near Timmins, $6 per ounce, very cheap. And then I like, who else do I like? Minera Alamos, or Alamos, as you North Americans pronounce it. And that's developing 3 low-cost gold mines in Mexico. The first is producing, the second will get into production next year, hopefully, and the third the year after that. And that is going to be what would you call that? You'd call that, it's going to get a re-rating from development play to mid-tier producer.
Right, and these are all detailed in your newsletter, The Flying Frisbee, and why investors should look at that. What I've enjoyed, though, like bringing back to the metal, is, as I say, you have a very romanticized view of gold as well as a very pragmatic, practical view of gold. One of the points that resonated with me is that you said gold is the closest you will come to touching eternity. That life is temporary, gold is permanent. Elaborate on how gold is the closest we will be to touching eternity.
So it's generally agreed that gold is created when stars collide, interstellar collisions, supernovae collisions in space, and heavy metals get created, and then the explosions disperse them into space. And the solar system is thought to have been created that way. Then over time, gravitational pressure, collision and so on, compressed all the dust together, and the solar system was formed. But gold was present in the dust which formed the solar system. Okay? Then you bear in mind, you cannot destroy gold. It is permanent. It never loses its shine. You can beat it into a layer that's 1 atom thick, but you can't destroy it. It's incredibly malleable, it's soft, but it is permanent. And if gold was present in the dust which formed the solar system, and gold is permanent, that means when you touch that little bit of gold around your neck or on your finger or wherever it is, you are touching something that is not just older than the earth itself, it is older than the solar system. And therefore, I say, when you're touching gold, that is the closest you will ever come to touching eternity.
And that is a very profound,
it is a profound
and
thought.
Poetic statement. And it's also interesting how you point out the long history of gold being recognized as a store of value, saying that gold is the first and oldest recognition of value, universal recognition of value, global recognition of value.
So if you Google what was the first metal that human beings used, it will tell you that copper is the first metal that human beings used. And Google is wrong. The first metal that human beings used was gold. We didn't discover smelting in the Bronze Age until maybe 3,000 years BC. We were using copper tools a little bit before that. But human surface gold, alluvial gold, was much more common in the Stone Age. And there are caves in Spain, Paleolithic caves, 40,000 years, inhabited 40,000 years ago, and there's signs, little bits of gold in there. And human beings would have found nuggets of gold in rivers as they hunted and gathered. They would have taken them up, they would have molded them into beads, into jewelry, they would have worn them, handed them out as reward, as prizes, as barter and tools, and as a tool of exchange, to store wealth, to display wealth. Look at me, I've got this gold nugget, I have access to this special material, you should mate with me, all this kind of thing. And in short, we were using it for exactly the same thing back then that we use it for now, to store wealth, to display wealth. And in other words, we were using it as prehistoric money. So our instinct for gold is primeval. It's primal. It is the oldest commercial instinct of the human race. And I talked about, the eternity of gold. We also have this instinct. We have an instinct as human beings for beautiful things. We like beautiful people. We like beautiful landscapes. We like beautiful sounds, because they're all to do with survival. Everyone loves the sound of running water. Well, we need running water to survive. We find certain landscapes beautiful. Well, those tend to be the landscapes that have the things we need to survive on them. We find other people beautiful. Well, they tend to be the person that you want to reproduce with the most and further the human race. And similarly, we have an instinct for gold. And so it's older than life itself. We have this instinct for it. And then, as I'm sure every person watching this will know, its purchasing power never goes away. Gold will buy you as much food, as much accommodation, as much clothing, as much energy as it ever has. It preserves over time. And so all these reasons are reasons to own gold.
Given all that you've said, and given that gold is a universal recognition of value and has been through the beginning of time, do you not think, though, that its value is being seen in a diminished capacity relative to other things in our current macroeconomic financial environment? And I mean, arguably it has. It is being seen not as that universal recognition of value. And so why is that?
Well, I think you're right. And we're in an age where the digital economy grows. I think even the IMF or someone, or the World Bank, has put numbers on this, at 3 times the speed of the physical economy. And if you look at, the growth of Silicon Valley, the growth of Facebook and Google and all the tech stocks relative to Walmart or, something that works in the physical economy, tech just grows much more rapidly. And it's because of the scalability of digital. And now we live in a world where value is digital. Whether it's cryptocurrencies, 99% of money is now digital, the bond market is entirely digital, trademarks, intellectual property. I just invent a brilliant app and I upload it to the App Store and it can be downloaded 1 billion times. If I invent a brilliant cup, I've still got to manufacture millions of the cups and distribute them. So there's just a scalability. And value is now digital. And in all of this, gold is the most analog asset there is. It's an analog asset in a digital age. I can't send you gold on my phone in the same way that I can send you cash or I can send you Bitcoin.
Well, they're working on that in terms of, there's tokenized gold.
There's tokenized gold. I can exchange ownership of it, but I can't actually send
Yeah.
you the gold.
Right.
And I could change the custody. Of course, you can do that. And so it's an analog asset, but it's the only asset there is, possibly Bitcoin aside, that the value is inherent in itself. Like if you go into a shop, all money now is promises. Like you go into a shop, you buy something with a credit card, your credit card's talking to your bank, which is talking to the machine, which is talking to the machine of the shop. It's all just a million promises going, blah, blah, blah. And that's all money is, promises. Adam Smith, all money is belief, credit, I believe. It's just promises between parties that trust each other. Gold is the only money that is nobody else's promise. The value is there in the piece of gold.
Yeah.
And all I was going to say is we're in a funny kind of age where, particularly because of expensive property, people don't value stuff anymore. Like if you talk to my mother, her generation, the generations before, they really value things. Whereas now things are just disposable and gold is a thing. And so that's working against it. And I think there are three potential futures for gold. There's one which it just goes back to being jewellery. That's all it is. And a few cranky people on the internet say it's going to be money once again. But basically, it just goes back to jewellery. Two is its insurance. It's jewellery, but it's also the money of last resort. So it's kind of insurance. And then three is it actually somehow resumes its role as money once again.
Right.
And I think it's unlikely, but that is a possibility. And I can tell you why if you like in a moment.
And we will get to that, and certainly a lot of reasons pointing to that, including the fact that you've never had a global reserve currency that didn't start off being backed by gold. And that, I guess, is back to that point that you were saying, that gold does not require a third party. So I want you to elaborate on that more, that it's the only bearer-to-bearer instrument that does not require a middleman.
Yeah, its value is inherent in itself. And as you say, there's never been a global reserve currency that did not start out backed by gold. And they all ended up getting debased into oblivion. But the first global reserve currency, Alexander the Great, probably, first great empire, and he sent his money around the empire with his images of, it used the coin as imperial propaganda, right through to, Romans, the British, America now. They all started up backed by gold and sometimes silver. And they all, are getting debased. Now, China,
right? Yes,
as we know, is extraordinarily ambitious. And we hear that it wants its currency to be backed by gold. But maybe that's just a rumor put about by gold banks. We don't know. But we do know that China is ambitious. I've probably studied this more than anyone. And I'm going to tell you now why China's gold holdings are probably 10 times what they say they are. Okay? And the maths of this are quite simple. At the moment, America says it has 8,000 tons. China says it has 2,000 tons. Okay? America's gold hasn't been audited in however long, as we all know. But 65% of foreign exchange holdings are its gold. China's at just 3%. It has $3 trillion, which it doesn't want to devalue. Its motto, we must not shine too brightly. But 2,000 tons, remember that figure. Now, in 2007, China overtook South Africa to become the world's largest gold producer. And we know from geological records that it has produced this century roughly 7,000 tons of gold. More than 50% of Chinese gold mining is state-owned, and China does not export any of the gold that it produces. It's not allowed to. So all the gold that China has mined, is 7,000 tons, has stayed in China. In addition, China is the world's largest gold importer. And it has been for many decades, at least 2 decades. Now, we don't know how much gold it's imported through Switzerland, through Dubai, through London, because those transactions are all private. We can put a figure on Hong Kong imports. We know that a lot of gold that enters China, not all, but a lot of it, goes through the Shanghai Gold Exchange. And we know that 22,000 tons of gold have been withdrawn from the Shanghai Gold Exchange since this century. So that's 22,000 tons and 7,000 tons. That's 29,000 tons. And there was another 4,000 tons already in China in the year 2000, state-owned jewelry and all the rest of it. So we know that there is at least 33,000 tons of gold in China. 33,000 tons in gold in China. America has 8,000. China says it has 2,000 in the People's Bank of China. Of that 33,000 tons of gold, not all of it, let's just estimate 50% state-owned. Some people say it's higher than that. Some people say it's 55, 60%. But if you just say 50% state-owned, then you're looking at 16,500 tons of state-owned gold in China. There are other state bodies that own gold. It's not just the central bank. But 16,500 tons is twice what America has. So if China turns around and goes, we got twice as much gold as you, that's tantamount to a declaration of war. The yuan gets revalued upwards, gold gets revalued upwards while China's still accumulating, but most importantly of all, China's $3 trillion US dollars get devalued. It's not ready for that yet. But we must not shine too brightly. But believe you me, the gold is there. And if China wants the yuan to be the global reserve currency, all it has to do is make it freely tradable with gold.
And that brings us to a point that we're seeing central banks doing record-breaking gold purchases. According to the World Gold Council, 2023 is on pace to break the record of 2022, and leading that purchasing spree is China, part of an 11-month buying spree. And that's what they're telling us, right? That's what they're reporting. People's Bank of China bought 181 tons this year, taking gold holdings to 4% of its reserves. And that's what they're disclosing. That's what they're saying out loud. Now, you've said that China saying we have more gold than the US is tantamount to a declaration of war. Is that the objective? Is that the end goal? Are they biding their time until what would be the moment then?
I don't know, because I'm not Chinese and I don't go there. Last time I was in China was about 15 years ago.
What do you think is the aim then?
But I've noticed now that every month, every couple of months, it announces that it's got, the People's Bank of China announces it's got a little bit more gold than the previous month. And I think they're just drip feeding. They're just getting the market used to the fact that they've got more gold than they say they do. I just think they're just basically treading very softly, letting people know the truth. Breaking the news gently is what I think is going on. But it's interesting that they're disclosing, because previously they were very secretive about it, and now they're doing it. But coming back to your point about central bank gold buying, if you look at the central banks who have been buying gold, they're almost, and it's at the highest rate since the late 1960s, they're almost all central banks that lie along the Silk Road. The central banks of nations that lie along the Silk Road, part of the Shanghai Cooperation Organization, which, as we know, is looking for a currency that it can trade between each other without having to rely on the US dollar.
Right. I mean, and there was a lot of speculation that the BRICS, Brazil, Russia, India, China, and South Africa, were going to launch a commodity-backed, potentially gold-backed currency as a common bloc currency. There were expectations that this would happen at the meeting in South Africa this summer. That didn't happen. The trend to de-dollarize was accelerated, with them continuing to say we'll have trade agreements using our own currencies. But is that off the table as a common bloc currency, or do you think maybe China's going to go on its own and say, we're going to, and I'm asking you to speculate, but is the common bloc currency still on the agenda, or is it more likely, do you think, because China's the major accruer of this gold, that it goes solo with this declaration that we're backing the yuan by gold?
The problem is, like, every time a trade happens, are they going to stick the gold on a plane and fly it over? You know, that's the problem, is they've got to find a way that they all trust and rely on, some way of...
And that's called blockchain.
What America has, well, blockchain is one solution. What America has, despite everything, is it's still, the world with a few exceptions, still trusts the dollar, not so much the dollar, but the banking system. They still have faith in America and America's systems, which are a legacy of Britain and Britain's systems. They still trust it. The trust is not what it was, but it's still trusted. The problem with all those regimes that you described is they don't have the same levels of trust yet. They're getting better, and of course the beauty of gold is it doesn't require trust. That's the beauty of it, and also the beauty of Bitcoin. But the problem that they're trying to figure out is a system whereby trust is not required. And gold and Bitcoin are both solutions to that. So, but they might not want that. But the practicalities of a gold-backed currency for use for trading among BRICS countries, it's not as simple when you actually come to do it as it is on paper.
Right, and of course there is distrust amongst the BRICS, amongst themselves as well. It's not that they don't like the West or they don't like the US, they don't really trust each other. And now we've got the expansion of the bloc, adding 6 new members, and one could argue that the bigger the coalition, the harder it is to form any kind of consensus. We've already seen tremendous flashpoints between India and China. So expecting, friction there if they were to come to some kind of agreement. India also pretty big on gold, at least from a population sentiment perspective. Not sure where they rank on the world's top gold holders there. But it does seem as though it wouldn't be inconsistent with the Chinese mentality at some point to buy their time, and when the timing is right, to go it alone.
Well, if China, if it comes to this, China declares significantly higher gold reserves than it had previously declared. It audits them. It makes the yuan interchangeable with gold. You can go into a bank, you can swap your yuan for gold if you want to. That will win trust, and very quickly. It would also be a massive kick in the face of unbacked fiat money, the dollar and the euro and everything else. Because if you've got a choice between a gold-backed currency and a currency that's only backed by the law or whatever, you're going to choose the gold-backed currency.
When we say gold-backed, you mean interchangeable for gold?
Yeah.
I come in with a bunch of yuan and I get gold back? Yeah. Because we haven't seen that in a very long time.
But if China wants to become the world...
Would it need to go that far that you could actually exchange it for gold, or just the idea that we have audited gold reserves?
I'm not saying everyone's going to go in and swap their yuan for gold, but they have to know that they can. And once they know that they can, that will be a huge trust-winning tool.
When you say that's tantamount to declaration of war, what kind of response do you think that will get? And I know you're a comedian, you're an author now, you're a geopolitical expert and a prognosticator of the future.
I don't think it's a question of if, I think it's a question of when. I think we're probably 10 years away, but I do think it's coming.
What, China making this announcement?
Yeah. And it's just not ready to do it yet. It's got too many US dollars, it's got too many trading relationships. But at some point, if it kicks off between China and the US, and we do seem to be heading that way, when you go to war, you saw it with US and Russia. Straight away, the US weaponized the dollar. Yeah. No, you can't use our dollar. We're confiscating your gold reserves and you're excluded from the financial system. Bosh. Well, if China wanted to do that to America, it could weaponize its money. And that's an extremely, in World War II, the Nazis printed loads and loads of pounds, and they were going to drop them on England to create economic instability. And it was something like, it reached the point where 10% of the pounds in existence were Nazi forgeries. But the problem was they didn't have the aircraft to do it. This was 1943, and they were using their aircraft elsewhere, and they'd run out of aircraft and so on. Otherwise, they would have done it. So they were just sort of trading around the continent. But the weaponization of money in war is not a new thing. So if China goes to war with the US, then it will weaponize money.
And we know that the US weaponizing the dollar excessively, as some would say, is the reason that we have this de-dollarization trend, right? That the unprecedented fiscal and monetary stimulus that we've seen, and the MMT approach to a degree that's been taken up by the Fed, combined with those sanctions that you've mentioned against Russia, that was perhaps a turning point for the world against the dollar, thinking, well, we can't be safe with the US dollars as our assets because we don't know when the US flips the switch on us. So arguably an issue there. You mentioned that you could see a currency being backed by gold, and you also threw out Bitcoin in there. Now, you're one of the very few people at this conference that likes both gold and Bitcoin. So expand on that for us.
Well, Bitcoin was designed to digitally replicate gold. The only thing that Bitcoin doesn't have is gold's beauty. Where Bitcoin's beauty lies is in its mathematical code. And by the way, it's been discovered that when mathematicians see beautiful formulas, the same emotion gets triggered in the mind that gets triggered when we see beauty. So perhaps there is some kind of crossover. But the thing about Bitcoin is you can send it through space. I can be in Mars and I can send you Bitcoin if I've got an internet connection. So, if we have space travel or whatever, Bitcoin might have a use case that gold doesn't. Mind you, actually gold gets used in outer space. It gets used to coat aircraft, but that's by the by. But yes, the obvious solution to Putin and others' problems in the Shanghai Cooperation Organization is to use Bitcoin. Whether they can bring themselves to do it or not is another matter. But it is an obvious solution for them. And given how much Bitcoin mining is in China, you would have thought the Chinese would be all over it.
Well, let's talk a little bit more about Bitcoin, because you have said from a personal investor perspective, its potential is too enormous to ignore.
I think the risk with Bitcoin is not owning it.
Yeah, it's more risky to not have exposure to Bitcoin than to have exposure to Bitcoin. And that's a sentiment we hear at the Bitcoin conferences that we attend. But I'm going to quote you, because you're right, by owning Bitcoin, you're effectively owning shares in perhaps the most technologically brilliant system of money in history. The technology is already becoming the template for national currencies in the form of central bank digital currencies, CBDCs, but as a supranational money for the borderless medium that is the internet. And with its capacity for micropayments, Bitcoin's potential scalability dwarfs that of national currency. And then you make this point, which I think many people at this conference may take offense to. You say, if you look at the combined average IQ of people in the Bitcoin sector and compare it with, say, gold mining, there is no contest. Bitcoin abounds with brain boxes. By owning Bitcoin, you're effectively leveraging this extraordinarily high combined IQ.
Yeah.
Yeah. So you're saying that the people that own Bitcoin are inherently more intelligent?
You go to Bitcoin conferences, and particularly in the early days, and crypto conferences generally, it's full of, geniuses. The average forehead height is about this high. It is full of incredibly clever people, computer programmers and all the rest of it. And the combined IQ is extraordinary. And I feel that by owning Bitcoin, you're exposing yourself to that combined IQ. And, people who work in mining are many things, but they're not always the brightest people in the world. I'm not saying that everyone in mining is thick. I'm not saying that for a second. But Bitcoin is full of geniuses. There's also a lot of thickos in Bitcoin too. But it's like, if you think of, even though the US dollar is the international reserve currency of the world, but even me living in the UK, if I want a US dollar account, it's problematic. So I have to, I can keep it with PayPal, but then I have to pay Forex things. And if I want to send the US, it's just problematic and expensive. And I'm, a fairly financially sophisticated person. If I'm somebody in Africa or somewhere, it's hard enough getting a bank account in my own currency, let alone a US dollar account. So fiat currencies are the scalability of fiat currencies, even the US dollar, is limited by the banking system itself and by borders. The pound can only grow so big because of the finite nature of the UK, whereas the internet has no such limit. It's borderless. And Bitcoin has the potential to become the default cash system of the internet. And everything like air miles and supermarket rewards points and all that, they all need like a standard. And Bitcoin could be that standard. And just that gives it, even from today's prices, an extraordinary scalability. And if you said to me, which is more likely to double, Bitcoin from $30,000 or gold from $2,000, I'd probably say Bitcoin is more likely to double than gold is, even from these high levels. And there's just its potential is so huge, you surely have got to have an allocation to it.
What is your allocation to Bitcoin? Is it in the 10%?
In the Dolce Far Niente portfolio, we've gone 15% gold, 5% Bitcoin. But I know far brighter people than me that keep their entire treasury in Bitcoin, bar their spending money.
So you've said
They'll probably end up richer than me.
You've said that there hasn't been a global reserve currency that hasn't been backed by gold. Based on what you're saying, though, is there a likelihood in your mind that there could be a global reserve currency backed by Bitcoin? Could we be seeing a Bitcoin standard?
Yeah, it's possible. It wouldn't be backed by Bitcoin. You wouldn't have a currency backed by Bitcoin. You just have Bitcoin.
Right, but the Bitcoin becomes the standard, like we have the gold standard.
I think governments will hate it, and statists will hate it, and people who believe in central planning and everything else will hate it because they can't control it, they can't print it, they can't issue it, they can't do nudge policy and thing. The beauty of independent money is it ties the hands of governments. I talked about earlier not the immorality of government bonds because you're enabling governments with it. You could lend governments Bitcoin, I suppose, but it's not the same. You know, a government can't run up deficits and go to war if it doesn't have control of the printing press.
Right.
So it's sound money, and libertarians like it, and statists don't. And there's the great divide in the world.
And it's interesting because a lot of the people that like gold are libertarian and they don't like overreach of government. They like decentralization. They don't like how government devalue and debase currency. And it's a lot of the same mentality that goes into Bitcoin, which is why it always surprises me that you don't have more people overlapping with that mentality and that general sentiment. Bringing it back, though, to what you said, that you know there's a far higher likelihood of Bitcoin doubling, tripling, 10xing than gold. Arguably, there's also a far higher likelihood of Bitcoin going to zero than gold. So how do you reconcile that?
15% in gold and 5% in Bitcoin.
Because of that. All right. So to that idea that people are coming around to the you don't have to
gold is
idea.
Never going to go to zero. And the gold is going to be there long after you and I are but a memory. It will always be there. It'll be there long after the human race has been wiped out. It is the cockroach of all cockroaches. That's why I like gold.
But we can't say the same about Bitcoin. We don't know that. We don't have that track record.
It's got a lot of computer power behind it. It's pretty impervious. You'd have to take a nuclear explosion. You'd need a nuclear explosion to destroy gold. If that even works, you probably need nuclear levels of power if you're to break the blockchain. Don't think it's even possible.
I don't know that I have the background to comment on that and what it would take to break the blockchain, and if that is
nuclear computer power or something.
I mean, I know some have put up like quantum computing as a potential threat to breaking the blockchain. But again, back to this idea of owning both. It's interesting that we have the likes of Stanley Druckenmiller recently coming around to that idea. We know that he's a big time gold bull, gold bug, gold investor, whatever term you want to use. And he's recently said that it might be a good idea to invest in Bitcoin, saying, I don't own any Bitcoin, to be frank, but I should. And saying that it's clear that the young people look at it as a store of value because it's a lot easier to do stuff with, and saying, he wished he would have bought some Bitcoin. Do you think that mentality, if we've got the Stanley Druckenmillers of the world now coming around to this gold and Bitcoin not being seen as diametrical opposites, and Bitcoin being seen as a different kind of store of value for a younger generation. Do you think that mentality is going to start seeping into conferences like this
Maybe,
one?
I hope so. Stanley Druckenmiller is a genius. And what I most admire about Stanley Druckenmiller, like you said, he was a gold bull there, and I think he likes gold generally. It's hard to find, well, there's plenty of people who don't like gold, but he likes gold. But he's not a perma bull. And what I like about him is he's got the ability, he constantly questions his own conceits, his own narratives. And he's got the ability to go, he's never permanently in one asset. He's got the ability to hold an asset for 2 or 3 years and then go, right, the time for that asset has gone, it's time for this asset now. He's got the ability to go from one thing to another. And that takes an extraordinary psychology, an extraordinary flexible psychology to be able to do that. And I'm glad to see that he's come around to the idea of Bitcoin. If you want to get better at investing, don't watch Dominic Frisby videos, watch Stanley Druckenmiller videos.
I don't know, yours are also very entertaining and very enlightening and
Thank
bring
you.
a lot of historical facts and historical references complemented with several charts. So I wouldn't rule out Dominic Frisby just yet.
Druckenmiller's richer than I am.
Well, that is for sure. I think not having audited your net worth, I'm pretty confident in making that statement.
We need Bitcoin to go up quite a lot.
Well,
catch up.
let's go there. If you're going to give me a Bitcoin price prediction and a gold price prediction,
By when?
I'm going to give you by the end of 2024, knowing that there are so many variables out there in the world.
I think there's a good chance that gold gets, by the end of next year, gold goes on a run. When gold, it really looks like it's getting ready to move at the moment. And I think there's a good chance when gold moves, it kind of, you'll wait 4 years and then it'll do the move in 6 months. But I think there's a good chance that gold gets into the high 2000s, 2,700, something like that. Maybe even challenges 3,000 next year. It just looks good. And Bitcoin retests its old highs, 69,000, 70,000. I think there's a good chance of that.
All right, and of course, granted, there's so many variables that can come into play.
I mean, once they break, both of them, if Bitcoin breaks out to new highs above 70,000, gold breaks out to new highs about 2,100, it's clear, the passage is clear, there's no resistance. So, Bitcoin can easily go to 100,000, 200,000, if there's enough speculative mania and frenzy around it. If there's enough institutional money comes in, enough retail investors come in, old school legacy finance comes in with the ETFs and so on, it could easily go above 100,000. But I'm going to say next year, Bitcoin retests its old high before year end, and gold goes above 2,500.
All right, well, we will check back with you by the end of next year, see how we're doing there, right? And I always applaud guests that have the gumption to give a price target as well as a timeline, so thank you. But in the interim, I highly recommend that viewers check out your YouTube videos and also check out theflyingfrisbee.com, because as I say, informative and certainly very entertaining as well. So thank you for sharing this time with us, Dominic.
My pleasure. Thank you very much for having me.
All right, thank you. And as always, thank you for watching. I'm Michelle McCory. For me and the rest of the Kitco team, keep it right here for our continued coverage of the New Orleans Investment Conference.
Kitco News special coverage of the New Orleans Investment Conference is brought to you by Discovery Group.